Hi, this is Hille on Friday the 2nd of August 2013 with a nice short video on the US dollar index. So as you can see here on my system, it's DXC1 on my platform, and that is the futures contract for the dollar index, and obviously the continuous version rather than the month by month version, and that enables us to look at multiple periods of time, going back a significant amount of time as well. Now what I want to show you on this chart is simply the 200-day moving average, a simple 200-day moving average. See, I've got it here set up here, 200 MA, and here is the line here, this blue line, and it is a very powerful signal on the dollar index. So let's just have a look. Even just the time frame I've given you, which goes back until November 2012, so we're looking at, what's that, 8 months. You can see that price pretty much stopped bang on the 200-day moving average. Again, stopped bang on the 200-day moving average. Here it did blow through, but of course once you're through, significantly through, then it begins a period of strength above the moving average. Dip down here, but got nowhere near. Dip down here. Here it did get a bit messy. We spent like 5 days under, so it tried to go lower. We don't need these support and resistance lines in. These are old lines that I've drawn actually, so we'll just get rid of those. Not relevant for this video. And just following on, so 5 or 6 days, it had a go going below, failed, and has been up ever since. Here it just went under but never closed under. Same thing happened here. What I like to see is a close above the line. So here is obviously a close above the line. Once you get a close, then you're okay to take a long position. Here it wouldn't have worked for a few days, then you'd have reversed your position again. Here we didn't have a close below and it bounced right off. So we can see this happening again and again. Here it's a bit messy again, had a go at getting above. Had you taken a position here, you would have taken a small loss, but let's come back further and you'll see that the 200-day moving average has been fantastic all through here. Once again, once you've taken this long position here, you're long all through here and never got below the 200-day moving average till it finally broke through significantly. You can just have a look on your own. Here's another one where as soon as it broke above, it was away. Here's one where it touched and never broke through, certainly didn't close on the other side of. And again, a near touch, a near touch. Again here, broke through cleanly and was away. Here it was a little bit messy. And you know, you can just keep going back through this as far as you like, and you'll see that the same thing occurs over and over and over again. Okay, so what is the relevance to us of trading? Well, the first thing is that the 200-day moving average becomes a self-fulfilling prophecy. There's nothing particularly magical about 200 days, but the fact is that lots and lots of people watch 200-day moving averages, especially on currencies, but also stocks, but also on the US dollar, and so it becomes a self-fulfilling prophecy. Now the other thing to note, I don't trade the dollar index as a futures contract very often, almost never, but I do trade the US dollar itself. So lately, in the last few days, I've been wanting to go and have gone long the US dollar, and so I come and have a look at the dollar index, and taking a long US dollar position here is, given that I'm taking it off, let's say, the pound or the euro or some other currency, and I like the look of it on those currencies, maybe it's a new low or whatever I'm looking for, it's broken down below support and resistance, and I come and have a look at the dollar index, and the dollar index suggests to me that also this period down here is likely to be a serious level of support for the US dollar, and sure enough it did get supported along here, and my long US dollar positions were fine. And then obviously last night US dollar index took off, and we've almost got what's a bullish engulfing day, engulfing this candle. Certainly a very bullish candle, bouncing off from the 200-day moving average. So I'm very interested in always looking at what the dollar index is doing when I'm taking a US dollar trade. I want to be going either in line with the trend, or certainly for a long position I want to be above the 200-day moving average, and for a short position I want to be below the 200-day moving average. So it's a very handy tool to use when taking a US dollar position. So add that to your arsenal of technical trading tools, and happy trading.